June was a month where markets moved between volatility and selective recovery. Global developments, particularly US Iran tensions and crude movement, continued to influence sentiment, while domestic markets showed resilience supported by flows and earnings visibility. As we move into July, the focus shifts to how global risks, earnings momentum, and institutional flows shape market direction. To help us understand what this means for Indian equities in July, we are joined by Mr. Harsha Upadhyaya, CIO Equity at Kotak Mahindra Asset Management Company Limited. Welcome to the show, sir.
Thank you.
So, June saw a mix of volatility with a broadly constructive undertone, right? How would you describe the current market environment as we enter July?
See, clearly everyone's eyes were on the West Asia conflict that was going on for about 2.5, 3 months. That has got resolved sometime during the month. And of course, that had led to significant shock in the energy market, taking the crude oil prices higher. And there were concerns about how that's going to impact inflation, consumer demand over a period of time, etc. And those concerns have clearly receded with the resolution that has come about between US, Israel, and Iran on this issue. Subsequently, markets' focus has not been on any of the factors that took markets by a negative surprise in the earlier months and led to volatility. I think so. To that extent, market has seen some of these issues resolving and has seen some bit of calmness coming back to the markets.
So, despite volatility, markets have seen phases of recovery in the month of June. Do valuations offer comfort at current levels, or is caution still warranted?
For a large section of the market, I would say valuations are reasonable today. If you break it into large caps, mid caps, and small caps, clearly most of the large caps and the mid cap segment seems to be at a valuation which is lower than long term average or close to long term average. So, to that extent, making a diversified portfolio within large caps or mid caps or having any proportion between these two segments is definitely possible at this point of time without taking too much risk. There are some pockets of overvaluation in small caps, and at the index level as well, I think small caps are trading at relatively higher valuation. That's where there is still some bit of valuation risk. But by and large, for the rest of the markets, I would say valuations are quite reasonable at this point.
So, please tell us which sectors or themes do you prefer at this point in time?
There are multiple sectors and themes that we have been liking for quite some time now. For example, banking and financial services is definitely one of them. I think some of the negatives that played out for banks especially are no longer relevant at this point of time. For example, we did see interest rates coming down sharply over the last year and a half, and that led to compression in their net interest margins. There was also scramble on the low-cost deposits. Now with FCNR deposits coming into the banking system at some point of time, you will not see pressure on deposit mobilization. The interest rates are no longer going to see further compression from these levels. So to that extent, their net interest margin should also be stable or slightly better over the next couple of quarters. And valuations have become quite favorable. To that extent, I think banking and financial services is definitely one of those themes. We are also very positive on healthcare and pharmaceuticals. These two subsegments of the same sector, I would say, are in for reasonable level of growth from a medium-term perspective, and valuations are also reasonable, I would say. So that's definitely something that we've been positive about. And apart from this, we also think that manufacturing as a whole is a theme that you can play for the next several years, given the fact that the policy push in terms of Make in India, PLI incentives, etc., are still continuing. And given what has happened in the geopolitical context, every country, including India, would be looking to have a supply chain, have a manufacturing base which is more self-reliant. So in this context, I think the policy push from our government towards manufacturing should also continue for a longer period of time. And also it gives you diversity within the overall manufacturing space, depending on where the relative growth and valuations are better, that a portfolio manager can pick up. So overall, I think these are the two, three sectors and themes that we have been positive about.
So, with volatility and sector shifts, investor sentiment has been mixed. What would be your advice to the investors to stay focused and avoid short term reactionary decisions?
See, clearly there you have to follow time-tested principles of systematic investments and regular investments. You have to have that discipline. Of course, market will have ups and downs. There will be sentiments which will go up and down. There will be issues like war, which came and surprised everyone on the negative side, and that led to a lot of volatility in the markets for the previous 3 months. What's going to happen for the next few months, nobody knows. There will always be periods of volatility in the market, and one should be prepared for that. And that's the reason why one should have a systematic, disciplined approach towards investing. And if you invest over a long period of time with discipline, then hopefully with the long term focus, you should be able to create reasonable wealth. And that's what we suggest to most of our investors as well.
Right. Thank you so much, sir, for joining us and sharing your insights on the evolving equity market landscape.
Thank you so much. Thank you.
We hope this discussion helps investors navigate the current environment with greater clarity and perspective. For more such conversations, stay tuned to Kotak Mutual Fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.